I'd like to call the August meeting of the Insurance Committee to order. Have roll call, please.
Ms. Marion Petita.
Here.
Mr. Barry Plaisance.
Yes.
Mr. Al Archer is out this evening. Ms. Tina Babin. Dr. Dennis Giat.
Here.
Mr. Henry LaFont. And Mr. Randy Schwess.
Here.
Thank you. All right, the first item of new business is to receive a report from Carmel Bro of Norris Insurance Consulting regarding the renewal of LaFouche Parish School Board Workers' Comp excess insurance. Ms. Carmel.
Good afternoon. In front of you, you should have a spreadsheet. This is your excess workers' comp. I'm going to be brief tonight. Your policy comes up for renewal on October 1st every year. This is your excess workers' comp that covers injuries for your employees. Column 5 on the spreadsheet is the renewal being offered by your current agency, Jones Agency. Same insurance carrier, Store Insurance. The first thing I'm going to tell you to look at is line A2, the estimated annual payroll. You're going to notice this year the payroll is up about $9.6 million over expiring. So keep that in mind when you look at those increased premiums at the bottom. The self-insured retention, your deductible will remain the same at $750,000. All the other coverages will remain the same. You still have the $2 million of employer's liability. And when you get to the bottom, line 11, your annual premium for this year is going to be $69,938, about a $10,000 increase over expiring. Part of that increase is the increase in payroll. The majority of the increase is the increase in payroll. They did have a small rate increase, a 6% increase in rate, but the majority of that is going to be the increase in payroll. I'm going to recommend that you go ahead and do a motion to authorize the board to renew this policy.
We have a motion for Mr. Schwess, seconded Dr. Giat. Is there any discussion or questions from the board? Anybody from the audience? If not, vote. Motion carried unanimously. Thank you, Ms. Coleman. Item B, to receive a mid-year performance report of a self-funded medical plan as presented by Buddy Leday of Gallagher Benefit Services, Inc.
Thank you, Mr. Peter. All right, so I just did a little outline for you guys so we could just kind of walk through it together, but just wanted to first start with an update on where we are year to date on the medical plan. As we all know, it's a self-funded medical plan administered by Blue Cross Blue Shield. The prescription drug program is through Express Scripts, and the Medicare Advantage program for your 65 and older Social Security eligible retirees is with Humana. This report takes all those numbers and kind of puts them together. The first thing, guys, we'll just go straight to 2022, is to show that the last 2 months have run a little bit better than that really rough month we had back in May. So that's good to know. We're very curious to see what the August numbers are going to look like, because if a lot of the things that happened during the summer are going to start to come through in August. That's relevant to something later in our presentation today, but that's called claims runout. So stuff that occurred in June and July sometimes won't hit the plan until August. So I just want to kind of bring that up. So, you know, even though somebody might have had a major surgery in June or July, it may not have come through yet. So we'll see what August looks like. That's when those summer surgeries might start coming through, okay? You'll see the gross claims, the specific reinsurance reimbursements about on par with where they usually are. That's anybody who goes over the $300,000 specific deductible, that is going to be reimbursed. The drug rebates and subsidies. Again, we don't get the subsidies anymore because that was something to do with Medicare when those folks were on the Medicare Advantage now. So you'll see, though, that the drug rebates are up, and that had to do with the Express Scripts contract. Good news is that we think we have something even more favorable coming tonight, so we'll talk about that in a little bit. So there's your net claims less those reimbursements and the spec reimbursements as well. Fixed cost of the plan, again, that's somewhat relevant to what we're doing tonight. That is the administrative cost that you pay to Blue Cross Blue Shield to administer your plan. Okay, and it's also for the reinsurance to protect the school district from really high claims. So again, y'all are only on the hook for the first 300. And after that, the reinsurance picks up. The Humana premium, that's the Medicare Advantage. We're going to talk about that tonight. Got some really good news about Humana to share with you all. Then the total annual cost there. The number of employees enrolled, that is employees, that is not family members, is 1632. That's the employee retiree funding. That's what they're putting into the plan. The school board level funding, that's what y'all are putting in regularly. And the 1.5 million, that's the additional. So that's what we're running behind right now. And I think that y'all discussed accounting for that in future years in other meetings, correct? The employer split funding, it shows there. That takes into account that additional funding the school board is given as well. And then the monthly average cost. It is up 2.63% from last year, which is slightly a better trend than where we were the last report I gave, but it's still not where we want it to be per se. We're hoping that the rest of the year finishes strong, but we're looking for any savings we can get for next year. Any questions about the year-to-date performance? Okay. That's the end of that agenda item.
All right, so can we go on accept the report, or we just accept? Okay.
Just for information.
All right.
It's just a report.
All right, thank you very much. All right, and letter C, to receive a report from Buddy Leday of Gallagher Benefit Services Inc. on the Humana Medicare Advantage renewal for the 2023 plan and take appropriate action.
So very rare occurrence, but they are going to go down on your premiums for next year on the Humana Medicare Advantage program. What we're showing on this little sheet that I gave you guys is just that the first thing is at the top, 2018. And 2018 is when we first went out to market to move people to Medicare Advantage. Remember, the whole purpose of this was that there were federal dollars out there that we weren't taking advantage of to bring into the school system to help pay for the retirees' insurance. By doing the Medicare Advantage, y'all all know it saved the plan a lot of money for a couple of years. Well, it still is, but it helped recoup some money for a couple of years. The top shows who we went to back in 2018, and we just want to show this to show we did our due diligence, and here's what the prices were in 18. So that we can show that where we are in 2023, going from 2021 last year, it was $209 per member. It's going down to $197.35, so down about $10 per. The reason we show those other numbers is because we're not going to go out to market when a company is going to give us a decrease. And additionally, when in 2018, nobody beat it back then, they're probably not going to beat it now. Additionally, it's just been highly successful to retirees. Retiree sentiment is important. We're not just looking at dollars and cents, but we take into account the feedback we've gotten. And it's been nothing but positive about the Humana plan that I know of. Lately, especially, we went through some transition and we've gotten past that. So our recommendation will be to go ahead and renew the Medicare Advantage program for 2023 with Humana at a decreased cost of $197.35.
We have a motion. Dr. Giat, second, Mr. Flavon. Let's vote. Oh, we have any discussion? I'm sorry. Any board discussion? Yes, Barry.
Thank you, Madam Chairman. From the retirees I've spoken to, the plan is fantastic. You know, it's been good, and the price is relatively low, and they're going to be happy about this number as well. So, thank you for your work, and
it does save a little bit of money for the retiree and for the board. So the percentage that we charge doesn't change. Everybody gets a little money.
As the husband of a retiree, I want to reiterate that what Barry said. Plan is very good and no problems with it at all.
And I have to agree with that, being on the plan. And do we have anyone in the audience from the public that wants to make a comment? If not, let's vote. Motion carried unanimously. Letter D, to receive proposals for pharmacy benefits managers PBM for the 2023 plan year presented by Buddy Leday of Gallagher Benefit Services Inc. and take appropriate action. We're doing it.
Again, I just want to start by saying the reason we do this all the way in August for next year is because we enroll early. So these decisions are made at this point in time, and it's a small window we have from when we can go out to get these proposals because we have enough data from the year, and when we can put them all in place and approve them and start enrolling them for the next school year. So that we are early, but we're really not early. We're right where we need to be. So I just wanted to say that if it feels kind of early. So this year, guys, we're only in our second year of a 3-year deal we have with Express Scripts. However, our pharmacy benefit management department, led by Dr. Tom Tran at Gallagher, all the contracts they negotiate to where you can get out of those contracts without cause with a 90-day notice. And they negotiated that in Express Scripts contract, okay? The reason we went out to RFP a year earlier than we expected to is because something new has recently come up called alternative funding, right? These are dollars that are created by primarily the pharmaceutical manufacturers, the companies that make the drugs, in order to make their really, really high-cost specialty drugs affordable to people who might not be able to otherwise afford them, okay? The beauty of being a self-funded plan is that by carving out your pharmacy, you can participate in that program, okay? Whereas employees who take certain specialty drugs and have a household income under $150,000 can get their drugs at no cost to them and no cost to the school district, okay? And it's going to save a tremendous amount of money for the school district going through this process. Everybody wins. So employees no longer have to pay even a copay for these really high-cost specialty drugs. You have about 90 people within the school district that take those very high-cost specialty drugs, and some of those drugs can run up to $100,000 a year. Okay, it's really expensive. So by doing this program, that $100,000, again, if the member qualifies based on income, it does not hit the school district, nor does it hit the employee. So it's complete 100% saving the money. Okay, and the money is not coming from the government; it's coming from the pharmaceutical manufacturers. Okay? So this page I kind of stuck in there is just a typical market view. This is who we went out to. It kind of talks about who the big ones are. Express Scripts would be one of the biggest there are. CVS Caremark and OptumRx, we went to all of them. The middle tier, the one that I want y'all to focus on here is Elixir. That's who we're going to be kind of driving down a little bit. The smaller companies, and then the little regional ones in Script Care fell in that. We went back to Script Care because they were a really good partner for a long time. The thing about alternative funding, however, is that the big three will not participate in alternative funding. So Express Scripts, OptumRx will not participate, and the reason is because there's high profit margin in those drugs, and so they usually can win business by their rebates and their discount guarantees, and we took that into consideration. And had they won it based on discounts and rebate guarantees, that would be fine, but y'all will see that did not happen in this case. Elixir and Script Care were two of your finalists that would participate, and we'll talk about them a little bit more in a second. Okay? Just a quick little note on who they are. Express Scripts, 63.1 million covered lives. That's who you with now. Elixir, I don't want y'all to see, well, we never heard of Elixir. They cover 24.1 million lives. It's a big company, okay? They're based out of Ohio. Script Care is out of Beaumont, Texas. Y'all had them at one time, 4 million lives. And UMR, which is United Healthcare, owns the company, OptumRx, 53.2 million lives. So these are your final four based on the proposals, okay? The next page, it goes into a 3-year, so we signed 3-year contracts. Again, we can get out without cause if we want to leave, but this is what they're guaranteeing us over 3 years in terms of pricing and rebates. The first thing you'll see is your baseline. That is your current contract. The next thing you'll see is Express Scripts renewed contract, so they knew they were getting competition. So they basically, even if we just didn't do anything and stay with Express Scripts, there's still savings there because they made their contract better due to the competition. Elixir, you'll see 18% below what you're currently paying. Script Care, they weren't as competitive, and then UMR was very competitive as well. So Elixir looked the best with $4 million of cost avoidance over the next 3 years, okay? Now, I say cost avoidance, it's important to note that some people may say we're saving $4 million. Not necessarily so. It's $4 million of a better contract. So depending on what comes through based on analytics and projections, it's projected to be $4 million less than what you would have paid on your prior contract, if that makes sense, okay? That's not the end of it. So this is based strictly on rebates and pricing. The next page takes into account the additional monies that you're going to be receiving by those drugs running through alternative funding. Now, they do analytics and know that not all of the 90 people in the school district are going to qualify for this. Some may not. But if 70% do qualify, this is what it's going to look like, okay? And as you'll see at the bottom, Elixir is coming out with $5.1 million in cost avoidance by moving to their program. It's a 23.8% decrease from what you're currently paying. We realize that moving PBMs for some people, we got to switch this again. It's an important thing to do. It's an important thing to get back out in the market because there's so much money in these pharmaceuticals that you can go out, and especially with alternative funding, I think this is something that we need to do. The only downside that we talk about is formulary. So people's like, well, I take this drug and I know what's going to happen. They're going to tell me I got to switch to that drug. For some people, it benefits them because some people may have a drug that falls into a better tier. There might be some that falls back a tier. There's a give and take there. And there's also some situations where a person might have to switch medication. However, Script Care in their current contract, twice a year changes their formulary. They could do it at any time in the contract. So at any time, you could get a notice in the mail that says, we're currently paying for this drug and we want you to switch to that drug. And we talked about that before. It's just contract negotiations. If they could get the same drug that does the same thing, but it has a different name on it for cheaper, they want you taking that drug. So it saves the person money, it saves the school district money. That's the whole point of it. Based on this, our recommendation will be switching contracts from Express Scripts to Elixir, effective 1/1/23, to participate in alternative funding, which will require people in specialty drugs to go in through a system and apply for the program, okay? And if they get it, they save the money, the district pays money. If they don't qualify, they still get their drugs for the same copay they're currently paying. Okay? Is there any questions about that? But I'm going to recommend that y'all make a motion to move to Elixir for the 2023 plan year.
So move.
Dr. Diak, Mr. West, yes, questions?
I just wanted to clarify one thing. If a family does not meet the 150,000, if they're over it, do they then have to pay the copay? Can you explain how
Yes,
that works?
yeah, it works the same way as it does now. So those people who make more than that household income, they go through the system, okay, they report it, and then if it shows that they make more, then they will not qualify for the program, okay? Once that happens, all that it does is it goes back to Elixir and they fill the script as it normally would be filled with Express Scripts. And if the copay was $100, they pay the $100 copay for their specialty. Okay, so it won't cause anyone to not be able to get their drugs. It's a step people need to take. It's one extra step to potentially get it for free for them and to help the plan overall. So it's a no-brainer, really.
I have a question. And how will they apply? Online?
There's an online system. Everybody who's on those medications will be notified of what exactly they need to do. It's very hands-on. They're going to walk them through the process. And this all happens before next year, right? So that's why there's a lead-in time. We're trying to do this so that they can lead those people in. And the same thing, if somebody gets a new script for a specialty, they will be notified immediately. You need to go online and apply through this program to get it mailed to you, potentially at no cost if you qualify.
And the 150,000 threshold, that doesn't matter how many children you have, or, I mean.
It's household
it's just
income. There is some credits given for children and household depending on the manufacturer. So there's a system, okay, that they got to go into. And the different manufacturers have different threshold levels. Okay, so some may give credit, some use adjusted gross income, some use gross income. It's not consistent, but on average, it's 150,000. Okay.
Any other questions, board members? Yes,
When are we gonna get that list of medication?
You'll be notified within 90 days leading up to the first of the next year. So you'll be notified if you're on that specialty medication. There's only 90 people on it. It's not everybody, but, and that's the thing too. I mean, y'all have 2,000 people on the plan and it affects 90 people, but that 90, that's what's so crazy. That 90 people on the pharmaceutical spend is making up about 40 to 50% of the spend, just from those 90 people taking those specialty drugs. So this is tremendous help in terms of cost.
Any public comment? If not, we'll vote.
And I'll just, since you asked the question, if anybody's listening or if you're present, we're easy to find at Gallagher. Contact us if there's a drug that you take and you want us to check, and we'll let you know if it falls into that special.
Passes. That's unanimously. All right, item E, to receive proposals from medical third-party administrators, TPA, for the 2023 plan year, presented by Buddy Leday of Gallagher Benefit Services, Inc., and take appropriate action.
Okay. So we talked about this earlier. You guys have been self-funded with Blue Cross Blue Shield now for about 20 years. Blue Cross Blue Shield's been a great partner. I know people who have Blue Cross Blue Shield like it, because when we did try to move the retirees to Medicare Advantage, they didn't want that, but it worked out. But I knew they really liked their Blue Cross. But in our due diligence, we do have to go out to market every so often to see where the competition stands and if we can get a better proposal from someone else. There's several factors in making those determinations. The first is a network analysis, and I've talked to you all about that before. Gallagher has a proprietary system where the carriers, meaning Blue Cross, United Healthcare, Humana, report their discounts to us. And what a discount is if a doctor wants $100 for this particular treatment, then they apply their 60% discount, and the doctor really only gets 40. That's what you get. You're paying Blue Cross to use those network negotiated prices, okay? So when we did the network analysis for many, many years, Blue Cross Blue Shield was far superior. I will say that while they haven't been surpassed, they're running about equal. The competition has caught up, United Healthcare specifically, okay? So United Healthcare and Blue Cross are kind of running neck and neck on the network analysis. When we do it, there's a 2% plus or minus margin of error, and it fell within that 2%. So as far as we're concerned, it's even, okay? It's pretty close to even between the two networks, which that's never been the case. So it caused us this year to take the proposal process a step further, okay? And what that entails is getting what's called the ASO, or Administrative Service Agreements, from them so that we can go ahead and analyze what they're going to charge us to use their network. And United Healthcare's TPA is called UMR, gave us an excellent proposal. Blue Cross gave us a proposal as well. They actually improved their pricing just slightly from last year, so we'll save a little bit of money for the district compared to what you're paying this year through the competition. They kind of created that. So we take that into account. We interviewed and had meetings over 5 hours with the two. Both did a great job. I want to compliment them both because they were very professional. United Healthcare very much wants y'all business, and they did a great job, and they were excellent to work with. Other things that considered when we looked at that were transition expenses, or what we call run out. And that's something important to think about, because there is always that chance that a very large claim happens at the very end of the year. What Blue Cross does is they still have to pay the claim for you, even though it came later, outside of the contract period. And they charge a fee for that. That's a variable cost. We don't know what it'll be, okay? So if we're going to make a decision to move, we need to be sure that all of the fixed costs and the variable costs are going to guarantee the savings, all things being equal, okay? I will say United Healthcare's Administrative Services proposal was cheaper in fixed costs. It was, okay? But again, we have to take into account claims run out if we leave Blue Cross. In addition, the network analysis, this is the first time they're neck and neck. So it might be something we want to kind of keep track of over the next few years and see what happens, okay? So we took into account transition expenses and run out. The last thing was employee sentiment, and I think that was a huge player in the final decision was, you know, we haven't had any complaints about Blue Cross. We knew we were going to come in and recommend Elixir, which is a transition for a lot of people. So at the end of the day, we looked at a lot of different options. There were some fixed cost advantages on the UMR contract, but there were too much variance and speculation in terms of those variable costs. So our recommendation would be to remain with Blue Cross for the next plan year, but to know that we're keeping a close eye on United Healthcare's performance in terms of discounts over the next few years. Now, We'll see what they want to do with us in future years, but we think we have we're in a good position with Blue Cross to remain. So my recommendation would be to remain with Blue Cross, and I don't think that requires action. Do they need to renew, or do you want to renew, like vote to renew the contract? We could do that just for. I mean, it is slightly cheaper contract, so it is a slight change to it. So.
Move.
Okay,
We
move to
accept their
accept the
recommendations.
proposal by Mr. Schwest. Any comments, any questions from the board? Yes, liaisons?
Thank you, Madam Chairman. I just want to say thank you to Buddy, and not just Buddy, his entire team. Because Buddy didn't do this by himself. but
Good job there.
You know, obviously the savings are important, but it's not just the savings. You know, take everything into consideration, and that's truly important to our employees, that they feel that they can trust that you're giving them the whole system at the best plan possible at the best price. So I really appreciate it, and I think they'll appreciate it. Hopefully, you know, the savings can be seen as they are on paper. So thank you.
We appreciate that. We're proud of the work. I mean, obviously, I got to thank Delilah and Brianna and everybody, but also the pharmaceutical team. They do such a great job. Dr. Tran came from the PBM side, so he knows these contracts backwards and forwards. But also, you know, we dug deep into these contracts, and I want to say for the record, Gilmore was very, very seriously considered. It was compelling. It was, and we looked at things that we dug in deeper than what it looked like on the surface to really make it a fair fight in terms of, you know, what are we really looking at here? Because it's real easy to say who's got lower fixed costs, but there's a lot more to it than that. So we're proud of the work we did on that.
Yeah, so, what is the going rating for United Healthcare Services? I'm curious how it compares to Blue Cross Blue Shield. Obviously, the customers rate it.
Yeah.
And I know in the past, and way in the past, back when United Healthcare was, again, it's still a big player, there was some question about how it got administered or administrated. Like for me, if I'm, you know, they make a claim, it just didn't seem to be as smooth as what Blue Cross Blue Shield. So I'm sure they improved that. I'm curious to know if you know anything about the customer rating.
Yeah, so I will tell you that I have no issue at all with working with United. We have other clients who are with United Healthcare. The folks at United do a fine job. I have no complaints on our part, right? I don't know country nationwide and whatever it is. They're the biggest there in the country. I mean, Blue Cross Blue Shield Louisiana is a Louisiana-based blue, right? United Healthcare is the biggest in the country, and they're biggest for a reason. They do a good job. But again, those sentiments always matter, right? And I'm glad you're bringing it up because, you know, you can call around and I always try to say we got to be fair, right? So just because, for example, we have a group that might say, we hate it, we had United, we didn't like it, or we had Blue Cross and we didn't like Blue Cross. It might not have anything to do with that particular company, but what did they have before they switched, and did they like that better than what the switch was, right? So there's different factors at play. So I can't just bundle it all and say, you know, in general, Blue Cross is better or United is better. They're both fine companies, and if it comes down to the point where these analysis are showing that United Healthcare's discounts are passing Blues, I won't have any problems recommending that move. I'm not tied at the hip with Blue Cross if you're asking that question, but I will tell you, Blue Cross Blue Shield in this region, and United knows that. They know they're in an uphill fight when they go up against Blue Cross in this region because it's a Louisiana-based company that people feel comfortable with the Blue Cross Blue Shield name. Not that they shouldn't with United, but there is a sentiment that is to be considered here, especially when you're with a school district and, you know, employee morale and things like that. And you consider all those things because there's a comfort level knowing that I've had this for a while. Now, look, you guys are self-funded. So the plan document decides what's paid and what's not the insurance company, not the TPA. But there is a comfort level with Blue Cross. So that's a good question. But for my purposes, if the numbers were differently and there wasn't that sentiment, I wouldn't have a problem.
Thank you.
Any other comments, questions? Oh, I'm sorry, Adam.
Anything that you're talking about having
an impact on those of us who are young enough to be on Medicare.
So if you're on Medicare, you're on the Humana plan.
Right.
Yeah, you're gonna save money.
Oh, that's always good. It won't change the fact that we'll remain with Humana.
Correct. No, Humana's renewing for all the people on Humana. That does not change. The people who aren't, there are some of the retirees that are over 65 that aren't Medicare eligible. They didn't put into enough quarters, right? So they're on this Blue Cross self-funded plan, okay? They'll remain there, you'll remain where you are, and the current employees will remain where they are too, but they will have a new PBM, a prescription benefit manager.
Myself, but I'm extremely satisfied with what we've got with Humana.
Okay. It seems to be the general consensus, yeah.
And the fact that transitioning from one insurance company to another, our employees that's always a really big hassle.
Mhm.
And so since we're not saving a whole lot of money, I think that this is a good idea.
And there's no, and again, you mentioned saving a whole lot of money. There was a lot of variable cost in there that could have swayed it the other way. So I think that the general thought process was that if those variable costs didn't exist, if we were on a fixed cost basis, but we're not. So.
Yes, Dr. Dion?
Thank you. Oh, so one more thing. Y'all give them a report about the outcome and let them know. So like, for instance, they both gave you excellent presentations. Obviously, United may want to know, well, what was it that kind of held us back?
They know.
So they know. Because again, they're going to come back to the table. The hope is, and they'll come back to the table with maybe a better presentation or a better.
The fixed cost can only go so far.
Yeah.
Right? They know, look, it's hard to break a 20-year relationship.
Yeah.
So they
know what they're up against.
Correct.
That's all my question.
That's correct. Yep.
And on the flip side of that, does Blue Cross know how close United Healthcare was?
They know.
And also, you talked about watching, the costs and things like that. Is this for a 1 year? Or
No, we can go back out to RFP next year, but it's a 3-year contract, so they can't change their fixed cost pricing for 3 years.
That's what I was like, I knew that.
Their administrative
extension was
services,
3.
correct.
I wanted to make sure that this was.
Which is important, because I'm being honest, Blue Cross wanted more money. They did. So had we not done it this year, they were gonna go up. So.
Any public comment? If not, let's vote. Passed unanimously. Thank you very much.
Thank you, guys.
We appreciate all of your hard
Thank you,
work.
buddy. Okay, guys.
Yes, all right, before the meeting, we adjourn the meeting. We have Mr. Bond.
I just wanted to echo Barry's sentiments and thank Buddy and his team. I know they worked extremely hard on this set of proposals for all of our different carriers and in all of our different areas of health funding, health insurance funding, to make sure that they got the best deal they could for us. So I just wanted to tell him how much we appreciate you and your team.
We appreciate y'all. Thank you.
Thank you very much.
Thanks, guys.
Okay,
Thank you.
There's no further business. Meeting is